Alright, I'm gonna start with the weekly review, but it's quite obvious because I already posted everything. So if you go over the trades, you already know what I'm gonna say. But I'm gonna still do it. This week, I said in analysis, price is probably gonna get held till CPI. And what happened? Exactly as I said. We sweep this high, and then we make the high of the week. When? Keyword, when. And you're gonna see what I mean. And then CPI makes a real move. And as you guys know, the weekly candle, you have manipulation, and then distribution. And then we follow the distribution. We don't create the manipulation. And then the weekly candle ends. And put it like this. I'm tweaking. Like this. And then we leave a wick. And that's exactly what happened this week. Look. Always the same. And once you realize it, trading is going to be so easy. And then we're going to make some demo money. Let me open up my indicators. And this is how you should do the review for the week. No voice crack. And so we have this, the weekly open. This is not the most important, but it's quite important. Why? Because we consider everything above weekly premium, everything below weekly open is discount. But obviously we are distributing, so we don't really care that it's discount. But where does the high of the week form? In premium. And I was talking about this with one of the mentees in a call, and it was the biggest cheat code. So right here, we have this fair value gap. Mark it up properly. We have a low in a fair value gap. We displace through it with another fair value gap. What does that mean? That means this is the change in the state of delivery, and the high of the week is probably going to get hold. So if we did not have CPI here, you could have traded the continuation cells. Or if you wanted to be extremely sure, you would have traded after this change in the state of delivery. Why? Fair value gap. We rebalance this fair value gap. So if we are bullish, we should never come under here on a closing basis. You can sweep it again and continue, but you don't want to come under here on a closing basis. And we did that. Then we had double confirmation that we are bearish. And obviously the targets, let me put this in black. And obviously the targets are going to be this round liquidity. Why? Because this is a market maker sell model inside of a bigger market maker sell model. And price does not even have to come here until the market maker sell model is done. Because, okay, I used the wrong term. This can be a market maker model. So not a sell model, but it can be a market maker buy model, and we can continue up. But we don't care yet. We will just follow what price is telling us. And then if we come back in price, I'm going to go over the trades, which you guys already know them trades. But now I can explain the logic. So why did I take this trade right here? We come back into discount, fair value gap. We have a beautiful... Did I hit this? Well, I didn't trade this. I mean Tuesday, my bad. So we come back into discount. Wait, boys. This was the most beautiful trade ever. So right here, I was hesitant to long it. Why? Because daily order flow is what? Bearish. We did not close above here. And what did I tell you guys? If we break this high that rebalance the fair value gap, then it is a change in the state of delivery. So that's why I wasn't confident to long here. So if we go back in time, in price, then we can see Monday we make the intention of the week, like the intention of this market maker model, in my opinion. So this is the smart money reversal, first stage of distribution. And this will be the second stage of distribution and the draw on liquidity is close. That's why I took the trade. Because like when price is this obvious, you just gotta YOLO it. And then we have this H1 range here. And you could also see this as a breaker pattern. You can see high, low, high, low, high, low, low, higher, high. And then I was looking at price here in New York session. And what do we see? A short-term high, low, in discount, and was almost OTE. And what do? We buy in discount, we sell in premium, and then stops under the invalidation level, targets a little 2RR. I think I targeted on some accounts all the way up to here. How does price respect it? I don't know, G. I'm just a magician. Taking your profits here was also a good thing. And maybe if you're a scaredy cat, you can also take profits here for 1.76 RR. That's good. And as I said, you need to be cautious on CPI weeks. What happened? Instantly back into seek and destroy mode. That's crazy, right? Then we have this H1, change in the state of delivery. And we don't do anything in CPI. Or in my opinion, you are a gambler because your stop can get slipped and then you lose for 1,000,000%. Let me remove this stuff. As you guys know, in the market outlook, what did I say? If we are going to go down, we are going to not retrace. Why? Because this is a breaker pattern. And exactly what happened, we mitigated the breaker. We displaced down. And unfortunately, we did not immediately reach the drawn liquidity. And had this talk with another mentee, because the next day, we reached the drawn liquidity. And he was like, can we expect a Thank God It's Friday play? For the people that don't know, that means if this is the weekly candle, this would be the Thank God It's Friday play, where we wait for, where we just trade the retracement back into the range. And then I told him that this is my drawn liquidity for DXY. So I'm not expecting a Thank God It's Friday play after we swept the previous day's high. Because obviously when we sweep this, it kind of looks like, okay, we met our drawn liquidity, but this is why intermarket analysis is broken. Now let me go to Thursday, the trade. What did I tell you guys? The market only goes from internal to external. You have an H4 fair value gap right here. And I took this on a 3-minute. I don't suggest you do the same. But bro, my bias was so strong. We are close to the drawn liquidity. I just risked it. So once I saw us breaking below here on a closing basis, and we also disrespected this, I was like, okay, we are probably gonna head down. So I just market executed. But the ideal trade would be, we see high, low, high, low, higher high, lower low. So this is the breaker. And you guys know when I give ideas, I don't want to give like signals, so you could put your stop loss wherever you want. But I chose, I think I could have made it a bit smaller, my stop loss. But unfortunately, I didn't. But I think the ideal place to put your stop loss here, I don't know, 14 pips is beautiful enough. Price should not disrespect this breaker. So that was my logic. That's why I put it there. And we have a propulsion block, fair value gap. So that's 3 PDRAs. A big ass breaker, propulsion block, fair value gap. And I don't know what you can call these, reclaimed order blocks, I guess. But these are internal in my opinion. And then another cheat code. Why did I not take this manipulation wick from news to project my thingy? Wait, why didn't I take this wick? Excuse me, that's not Newswick. I'm not sure if it is. It's because the candles tell the story and the wicks do the damage. Now, as you guys can see, and you'll learn it by experience. Now, I don't know, it's just instinct. As you guys can see, we reach 2 standard deviations, we retrace a bit, and then continue down. It's so crazy. And right here, in my opinion, I put a trade in the chats. There was SMT with GU right here. So then this would be a mitigation block, fair value gap, overlapping, and then you just put your limit at the mitigation block or fair value gap, wherever you want to do, and go for a quick 2 RR to the draw on liquidity. Why do we not need to retrace? Because the logic and price is, if institutions are really buying here all the way up, then we want to reprice quickly so people get stopped out. I truly think that's how the quote-unquote algorithm is coded. And that's why price made this huge explosive move, because it would truly make no sense. The price retraces back here. All the people that were longing here and underwater. So you guys know there's breakout longers, and there's people that probably longed this continuation. We don't want to go back up because they will exit their positions at break even. That's why you see this explosive move. And beside that, who really would have caught a move here? Let's be honest. And imagine all the people that thought this is a turtle soup and longed. We are trapping them too. That's why we're repricing so fast. And that's how you need to have the logic and price in your mind, because that's the way you will improve. Trust me. That logic really helped me. And if there's questions, let me know. And now for the outlook for this week. Bro, with the geopolitical drama going on, I'm not sure if we're going to gap up or down. Obviously, probably on dollar, we're going to gap up. So on euro US dollar, we're going to get gap down. I don't know how much. So I think if I do the analysis right now, it's not that useful. So I'll do another weekly outlook. I'll update my outlook throughout the week. Let's go to the weekly. We tapped into this weekly fair value gap and this plays down. And in my opinion, we are currently in a market maker sell model. This is the drawn liquidity for me for now. I'm not saying that my logic is going to be set, like we have to go there. Everything can change whenever, and trust your own bias. We have a breaker pattern right here. And then we also have a breaker pattern right here. So I am not sure if we are going to see a deep retracement. Why? Because there's trapped traders here. So my opinion for this week, I will not look too long until I see a H4. By the way, I'm explaining how you should do it. Not how you should do it. This is not financial advice. This is just demo environment. But I'm explaining what I think a newbie should do. I think if you want to look for longs, you should wait for H4 change in the state of delivery. If this doesn't occur, then I don't suggest you should long. Why? Because we can just melt, and then you're going to be sidelined, you're going to melt, you're going to go crazy. And as you guys know, after big range days, we can expect a retracement or consolidation. So don't push your edge at the start of the week. Let me open up the economic calendar. So Monday, we have no news. Let me see what date it is. It's going to be 15 April. Okay, Monday, we have news at 8:30. So New York session. We have a huge range day right here. So London session is probably going to consolidate. Let me check DXY if we have drawn liquidity nearby. Or we might even expand to this fair value gap before retracing, but I'm not betting on that. And then Tuesday, we have Powell speaking at 1:15. So that will bring volatility. And probably there is where you can see if we are actually going to get a change in the state of delivery to come back and retrace. Or maybe even Monday. And then Wednesday, we have no news except GBP, CPI. And what I tend to notice when we have CPI on GBP, that the Judas swing for the day will happen earlier than usually. So look out for that. Then Thursday, we have unemployment claims in New York. So ideally, I would want to catch a piece of the weekly expansion on Thursday. And Friday, we also have news. So if we do not reach a higher time frame draw on liquidity, because I usually want to trade pro trend, and Thursday does not reverse, bro, I'm giving y'all some sauce. Look, if this is Monday, Tuesday, so this Tuesday juice thing, and then Wednesday expands, and this is a higher time frame draw on liquidity, and Thursday hits it, we might expect a retracement because we hit a higher time frame draw on liquidity. But if there is no higher time frame draw on liquidity, and Thursday is not showing willingness to retrace, we can expect Friday to be a expansion. So put that in your notebooks. That is a gem. If Thursday does not show willingness to retrace or reverse, and we have not yet hit the draw on liquidity, then Friday could be a good continuation day, especially if we have red folder news. And that is why I expect this Friday, if we do not hit a draw on liquidity, to just be a continuation or a consolidation. Because I just saw the red folder news event is GBP news, and I prefer red folder USD news events. And let me check what my GSEP sent. If you're doing outlook on high time frame like daily, and there's a big dump like the last 3 days of the week, you're looking for shorts too. Could you not look for the range and find where premium is and look for PAs, premium raise, that could be tapped through news or something? Like in the picture, for example, unicorn is premium, so would that not be an area to look for shorts during news days? Correct. What you just said is correct. If I do my outlook, I want to short from these breakers, but I'm not expecting price to immediately go there, but these are my key areas. Yeah, you had it correct. And you also put the range tool correct. But as I said, because these are breakers, we do not need to retrace deep into premium because we do not want everyone that's shorting to offload their positions. Okay, so you're not looking for a quick move? What do you mean? Do you mean like you just want to put your limit here and then target this? Okay, he said no. Let's see. Oh yeah, so yeah, exactly. I'm not expecting price to instantly come here Monday, Tuesday, and then drop down because we can just, the news events are not that nice. So I'm expecting maybe Tuesday set the low of the week, then we retrace, and then maybe next week we can drop. Like that's a possibility, you know what I mean? Damn, the news next week is not that beautiful either. But ideally, I want to play continuations from here to there here. If it happens, we're gonna make some bread, demo money. If it doesn't, then so be it. I more so meant that I don't want to trade from here to here until we have a change in the state of delivery, which indicates to me that we are ready to retrace. And I will monitor my positions when we hit these PD arrays. Why? Because these are reversal areas. And also what I told a lot in to the mentees is if we create a fair value gap right here, price might as well come here, create a change in the state of delivery or distribute orders and then melt. That's also a possibility. That's why I need to see what Monday's price action brings. And maybe Tuesday. If you guys have more questions, let me know. But that's literally the outlook. It's very simple. We have a beautiful breaker pattern, so I'm expecting shorts. Let me check bonds. Bonds are also in a downtrend and in a fair value gap. So if we see bonds trending down, that's a good confluence to short euro. Why? Bonds and euro are positively correlated. And GU, If you guys want me to analyze GU, let me know, but you already know it's like EU. Let me check this. This is why intermarket analysis is important. As you guys can see, this breaker right here is a bit lower than this one. So if we retrace a lot here, on EU, it may look like maybe we are disrespecting this. But it's okay, because we know intermarket analysis, if we retrace here, then maybe we can retrace deeper here or less deep depending on the strength of euro. And that is why intermarket analysis is important. Because sometimes you will notice we don't even tap into premium of the H4 range and melt. Like this would be EU. I need you guys to pay close attention because this is really important. So this will be EU. Now wait, let me put. This will be EU. And this will be DXY. And DXY would tap discount, but EU would never tap premium. But GU, let me put GU too. And then we have GU also tapping premium. So we have SMT. This is SMT. These are the important SMTs, not those 5-minute unicorns, okay? These are the SMTs that make you understand price more. Damn, wait. Okay, see, we tap discount here. It looks hard, but you guys should write this down, by the way. If we do not tap back into premium on EU, watch for intermarket do intermarket analysis and check if the other correlating pairs or inversely correlated pairs or positively, it doesn't matter which one. I prefer DXY because GU sometimes fakes you out. If DXY tapped discount, EU doesn't have to. Why? Because maybe euro is just extremely messed. Do you guys understand? I hope you guys do, because it's a cheat code. Wait, damn, I didn't even see that question, Zizou. Let me see. We also make a H4 breaker right there on EU. Let me check. Yeah, correct. Correct, but I would consider this the breaker. And daily is overruling the H4. So we are probably going to respect these breakers. And let me know if you guys have more questions because I just went through my view. Or if you guys want me to explain the trades breakdowns better, let me know too. But it's quite self-explanatory. Oh, and for the people that watch this video and that are here in the live right now, I need you guys, every time that I do a weekly outlook, you already need to have done yours before so you can compare if ours are similar. I don't want you to piggyback and be, how do you call that? Be reliant on me. I need you guys to be independent thinkers. And if your analysis, or not spoon fed, just reliant. And because imagine you only do my analysis and then it's GG. Because you're gonna be like that. You're gonna just wait for my analysis and do nothing. I don't want you guys to do that. Besides that, when you're in the market yourself, maybe you can see something different than me. Maybe I had a bad week. It's possible. That's why. And guys, if y'all have no more questions, that was the quick outlook. I don't have much more to say because it's a really simple week. To recap, I would not look for longs until I personally get an obvious H1 change in state of delivery or a H4 one. And then if I want to look for retracement buys, I would look to retracement buy into here. And then I would monitor if price is showing willingness to reverse. and then maybe I get a break even, or maybe I take my profits early. And that's, by the way, also something you will understand when you become a better trader, how to up your risk or lessen your risk or take profits earlier or take profits later. You guys will see throughout the months, and you guys will love the improvement. It's beautiful. Hi, boys. If there's no more questions, I'm out. Take care. Good luck trading. Yeah, I'm waiting. I'll wait. Let me know. Okay. So I'm gonna explain what I call a change in the state of delivery. So if we have a downtrend and we have a fair value gap right here. So if we continue our downtrend, we should not disrespect the high that rebalanced the fair value gap. So once we close above here, that is my change in the state of delivery. With intent, price needs to show intention that it wants to go up. So not if we go down and we close like this. Does this show intention? No, because this can just be a sweep to continue the unicorn. Like this can just be a turtle swoop sweep to continue down. Yes, it has to be a close with intention. No problem, G. And that will save you a lot of headache, because I see a lot of people thinking like this is a market structure shift because we have a miniature close in red, and then it just comes back up, and then GG. Hi, boys. Thank you for being here. And thank you for the people that are going to watch. Have a good trading week. And peace. Ciao.